So there's a prudent process for life insurance evaluation, and it's beyond dime, right? A lot of insurance agents and advisors, they try to do great work for their clients by using the dime method. Dime stands for debt, income replacement, mortgage, and education costs. But it doesn't just stop there. So usually for most insurance agents, though, it does stop there. However, there's a prudent process for life insurance evaluation, which can and will include the dime method, because the dime method is so simple that it can be done on the back of a napkin. Now, in my opinion, that's why states like New York implemented Regulation 187, which establishes a best interest standard as well as suitability requirements. Now, this regulation, it recognizes that proper financial planning requires more than simple calculations, which is a reason that I find it extremely laughable when specifically Primerica agents or securities licensed individuals who don't have New York residency attempt to create conflict, because they often aren't acting in the client's best interests. Now, if you're not familiar with the financial services industry, then you wouldn't realize that different states have different laws. It's similar to real estate, although unlike real estate, most states have reciprocity. Now, New York is its own beast and one of three of the most regulated states when it comes to financial services. Number one being New York, number two being California, and number three is Florida. Now, these regulatory frameworks, they exist for a reason. And that reason is to protect consumers from inadequate advice and ensure that financial professionals like myself are truly serving their clients' best interests, not just meeting minimum suitability standards. So I want to go over the prudent process, right? So, to my original point, the prudent process for evaluating life insurance includes several critical steps, and they go far beyond what most agents ever consider. So let's break down those steps in seven topics. One is a comprehensive financial analysis. So first, we're going to conduct a thorough financial analysis that goes far beyond dime. This includes examining your current assets, liabilities, cash flow patterns, your existing insurance, and your future financial projections. We're not just looking at what you owe today, we're analyzing your entire financial ecosystem and how it's going to evolve over time. So this means that we have to understand your career trajectory, your potential income changes, any planned major purchases, your retirement goals, and how your financial obligations are going to shift as you move through different life stages. We're building a dynamic model of your financial life, not just a static snapshot. So now step two is going to be risk assessment and life stage analysis. So here we perform a detailed risk assessment based on your current life stage, your health status, your occupation, and your lifestyle factors, right? A 25-year-old single professional has vastly different insurance needs than a 45-year-old parent with two kids that are approaching college, right? So this step ensures that the coverage aligns with your actual risk profile and your life circumstances. We consider factors like job stability, industry risks, your family medical history, and lifestyle choices that can impact both your insurability and your insurance needs over time. So let's move on to step three. That's going to be goal-based coverage calculation. So here, we're going to calculate coverage based on specific financial goals and obligations. So this includes immediate needs like final expenses and debt payoff, intermediate needs like income replacement during child rearing years, and long-term goals like legacy planning or business succession and exit strategy. We're creating a coverage strategy that adapts to your changing needs over time. This isn't just about replacing income. It's about ensuring that your family can maintain their lifestyle, achieve their goals, and have the financial flexibility to adapt to unexpected circumstances. So we consider inflation, changing family dynamics, and evolving financial priorities. So now let's move on to step 4. Step 4 is going to be the product type and structure analysis. So here we analyze which type of life insurance product best serves your needs, whether that's term life, whole life, universal, or variable universal life insurance. Each product type serves different purposes in client situations. The wrong product choice can be financially devastating regardless of your coverage amount, or what they call death benefit or face amount. So now this analysis includes understanding the cash value components, the premium flexibility, investment options, and how different products perform under various economic scenarios. So now let's move on to step 5. Step 5 is going to be the carrier selection and due diligence. So we've conducted thorough due diligence on insurance carriers, examining their financial strength ratings, their claims paying ability, their product performance history, and stability, because your policy is only good as the company that's backing it. And this step ensures that your coverage will be there when you most need it. Okay, so now let's move on to step 6, which is cost-benefit analysis and optimization. Here, we perform a comprehensive cost-benefit analysis comparing different coverage amounts, policy types, and premium structures. This is going to include analyzing the long-term cost implications and ensuring ensuring that you're getting maximum value for your premium dollars. Then we got step 7, which is integration with overall financial plan. So we integrate the life insurance strategy with your overall financial plan, ensuring that it complements rather than conflicts with your other financial goals and strategies. Now this is going to include coordination with retirement planning, investment strategies, and tax planning. Right? Now, there's some other things that we need. We need a professional collaboration network. At least your financial professional does. Now, here's where most agents completely fail their clients. They don't finish the job. So another aspect that I find concerning is that agents don't complete the job, because we, as financial professionals, we need to build relationships with estate attorneys to assist in making sure that our clients are able to do things like create a final will and testament, or create a trust for other assets to help them avoid probate. So life insurance often serves as a cornerstone of estate planning, but without legal documentation, even the best insurance strategy can fall apart. And estate planning attorneys help to ensure that insurance proceeds are distributed according to your wishes and in the most tax-efficient manner possible. Now, we also, besides just attorneys, need to establish relationships with accountants or CPAs and enrolled agents, EAs, because the tax implications of certain products and strategies, and they can have a lasting impact on your client's goals. So different life insurance products have vastly different tax treatments, from the tax-free death benefits to the tax implications of cash value growth and withdrawals. So without proper tax planning coordination, clients can face unexpected tax burdens or miss significant tax advantages. We should also befriend realtors and mortgage professionals. Although I find it odd that most of these professionals diminish the relationship with us. We are centers of influence, and we can assist in maintaining or even breaking a deal when someone is buying their largest asset, their home. And that's often when their life insurance needs change dramatically. A collaborative relationship ensures that clients are properly protected during major life transitions. Lastly, we should collaborate with other financial advisors. Why? Well, they might specialize in certain products or strategies that we don't. No single advisor can be an expert in everything. So, by building a network of specialists, we ensure that our clients have the access to the best possible advice in every area of their financial lives. So, that's going to be it for today, folks. Find my contact info beneath if you are looking for an advisor, currently unhappy with your advisor, or just want a second opinion. Thank you, and have a great day.